Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. The ECB this morning went full on dovish. They were expected to lower their growth forecasts. They were also expected to emphasize the potential to bring in TLTRO. They did it. They are bringing TLTRO back in September. Just remember, going back to the onset of quarter 4 2018, they were expected to hike in the autumn of this year. Now they're going to reintroduce easing measures in the autumn of this year. So a big switch here over the last couple months. Now stocks are not taking this very well. Banking stocks are getting hit hard. JP Morgan down more than a percent. Those banking stocks in Europe are also getting clobbered here. So that's dragging the market down. But really, the market is just really has had enough of the more and more easing. The rhetoric really comes in ahead of the delivery. You know, we started hearing about TLTRO 2 weeks, 3 weeks back, and the market reacted on that. So I think overall, the lower growth forecast, the fear is starting to work its way into the market. There's also some headlines out there about what could really come from the U.S. and China trade talks. And yesterday, that trade balance number, we think ultimately weighed on the market a bit. And you're seeing investors, you're seeing traders really start to question what is going to be the aftermath of a U.S. and China trade deal, and is it really going to be helpful to the market, especially after all of this jawboning that's taken the market higher. So where are we right now? We are seeing the S&P. It had tested into our next major 3-star support level, or just almost so. 2737 is going to be an area to look at. Now there is a gap area right around 43. The market fell into this and it's bounced a bit. The battleground today in the S&P is going to be 2751 to 55. It's a big area there to look at. That's where the 200-day moving averages come into. On a closing basis, we close below there. We're likely to see more pressure into tomorrow. Don't forget, though, non-farm payroll tomorrow. Now, moving on to crude oil, you're seeing this range-bound trade continue. We have major 3-star support below. We have major 3-star resistance above, and it's stayed in between there for days, for the last several sessions here. For actually quite a while. We haven't seen a breakout out above there at all on this move. And then really we haven't traded down below it and closed below 55.5 for this entire move as well. So play those ranges as the market's giving it to you until we get that close out above those levels or below those levels. Give us a call here. And then lastly, talking about gold, look at the dollar, what it's doing here today. And the dollar's rallied a lot on the zero weakness, but if non-farm payroll misses tomorrow, look at the treasuries, because the gold is not following those treasuries higher today. If the dollar weakens at all, per se, on a non-farm payroll miss, the gold is where you really want to be. Gold is where you're going to capitalize on it. So keep an eye on this trade here heading into tomorrow. Give us a call. Like I said, we're here to help with anything on the board, help manage risk, 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. Is not suitable for all investors. Thanks.